Ladies and gentlemen of the crypto space, we're live on a Monday, January 6th at 11:34 a.m. Think you all are in need of some rationality? The whole world is going to collapse. No, it is. It isn't. AI hype, agents, agents, call the agents, agents talking to agents. That's the biggest thing I've ever heard of. The coins, they're on social media. The coins are posting on X telling schmucks to buy. They're saying, "Hi, I'm a coin. I'm alive. Buy my coin." What the fuck is coming to this world? Folks are going to PvP the shit out of each other. All right, so the whole point of this stream is we've done a lot of conversation over the years, and I wanted to give an authoritative breakdown, trading versus investing with different expectations. And obviously, folks have questions and comments. So as I'm rambling and often ranting and raving, you're an X or on YouTube, post your questions and comments. So the mechanic is very simple for trading. It's player versus player. Oh, it's combat. You buy and you expect other dumb fucks to buy after you. They buy after you. You sell and take some of their money. It's imperative to at least understand the mechanic of the behavior in which you engage. That is trading. That is trading, whether it's in equities, whether it's in crypto, and that's dependent on volatility. You are betting in coin go up or coin go down. You are betting on the behavior of other people. Now, this clearly has an overlap with investing, except you're looking at different things, expecting different outcomes. And that is imperative to be granular in your inspection of what is your expectation. Expectations are everything. The psychological requirement of an expectation is to meet your damn expectation, because if you don't meet your expectation, you feel like a fuck up. Very simple. If you're throwing around $100 into shitcoins on Solana and you want a 10 million% return to make $1 million from $100, your expectations are statistically impossible to meet. Now, if you meet them, oh my, that's the whole point. If you meet your expectations, you feel a sense of satisfaction. If you don't meet your expectations, you experience disappointment. You become emotionally distraught. Oh, why did I do what I did? I wasn't right. I was wrong. I mean, technically, you're a loser. I don't mean that in the derogatory sense of the term. I mean that in the dictionary sense of the term. It's imperative to get the semantics right when talking hard. A loser loses. They lost. They didn't win. So make better bets that skew in your favor so you could win more than you lose. Ladies and gentlemen, that is the entire point of technical analysis, to attempt to skew the odds forever in your favor. So, you ain't doing no technical analysis on meme coins. Yeah, you're doing technical analysis on post critical mass meme coin, Le Fart coin, Le Fart. You could do TA on that shit. Shit that's post critical mass. Pepe, Brent, stuff like that. Now, that is an acceptable behavior even to the captain of rationality. Certainly is not behavior in which I engage. I, I, I do not. I neither advocate it nor discourage it. Everyone must make their own choices. What I like to discuss, and obviously the entire point of this commentary, is to ensure people meet their expectations. And to do that, you at least have to be rational and have this type of conversation in your own head. So by me having this conversation out loud, it allows other people to at least see what this type of conversation consists of. Choice of behavior. It's an expression of who we are. Are you a degenerate gambler? Are you an intelligent degenerate gambler that attempts to skew the odds in their favor? And dare we get to the concept of investing? Many would argue that technical analysis and shitcoin purchasing is investing. Everyone has to come to their own definition and categorization of behaviors, definition of terminologies. I don't know. I don't define it as investing, and that's okay. That's my choice. You are going to have that rational conversation with yourself and make that choice for yourself and make that definition for yourself. Is trading investing? That's a subjective thing to do. And my subjective, my personal interpretation is that it is not investing. To me, investing is taking the concept of capital management to an extreme, taking the strategization, the coordinated, intelligent effort to an extreme, encapsulated by things like dinner table investing. You need to be able to describe, like a professional adult, how you do what you do. That counts. That must count for something. There we bring in, concept of religions and how we get judged after we're dead. How are they going to judge you? Oh, I bought fucking fart coin and I made millions. Bought a Lamborghini. I got pulled over 5 times, lost my license, and I'm still driving. How will you be judged? And of course, people could express their arrogance and say, I don't give a shit about being judged by other people. That's fine. Disbelief in that type of human human narrative, religions and whatnot. I won't get judged. There's no one there. How about this perspective? I'm not the most religious person, but that's irrelevant. That's coming from a very agnostic person saying there may or may not be. This isn't a religious conversation, but the point is, if there is a judgment of some kind, how will you be judged? And maybe that's meaningful because it's not just like an afterlife type of argument. It's how will other people judge you? And maybe most importantly, how do you judge yourself when you're 95 years old looking back on why you did what you did? That's probably the most important judgment, the rational introspect, judging of oneself, culmination of their life. Why not think about that now? In the actions and behaviors that you choose, how will you judge yourself in the future? Were you reasonable? Were you rational? Were you prudent? Very important legal terminology. Were you a prudent investor? Did you exercise reasonableness? Maybe unbelief, but that's actually a very legal terminology also. Reasonableness. Excuse me. Okay, so investing. Logically, many people will conclude that investing is going to produce less returns than trading. Investing, as I define it, of course, that's the furthest from the truth. The odds are significantly more in your favor that investing will produce outsized returns as compared to trading, being intelligent with your capital management, because the odds are significantly skewed in your favor and you've significantly diminished your potential for loss and ultimately failure. Statistically, the vast majority of unqualified people trading lose not just some, they lose everything, which means they no longer have capital to do any further trading and or investing. YOLO mentality at its finest. You only live once. Might as well take a big gamble, a big bet. Now, as a parent, I often think of my own history with the education process, and everyone is always going to get blinded by hindsight. And I think of my kids and their education process. Now, where I'm at, it's been through extensive trials and tribulations and a self-education process. I strongly encourage everyone to be an autodidact, but that obviously has to be a self-choice. Has to be an adopted personality characteristic. Do you want to teach yourself? Can you teach yourself? And ultimately, the capacity to teach oneself is just a matter of asking yourself questions. How many questions? Endless questions. Question everything and answer it. Question, answer, question, answer, question, answer. And ladies and gentlemen, now with AI, not only can you answer your questions, you could have a computer answer your questions too. I am at a loss for words every time I bring up AI. Using ChatGPT Pro is something that could have never, ever imagined just a short time ago. It changes everything. The conversations you could have with a computer now with with an interface that's available today is superior to conversations that you could have with readily accessible human beings. Why do I say that? You have readily accessible to you $1,000 an hour lawyer, a $300 hour accountant, a team of university professors, access to a university library that's instantly indexable and searchable. No, you have none of those things. None of it at all. But with AI, you do. And even with ChatGPT 4.0, I would encourage O1, but O1 Pro is like, holy crap, it's at a whole nother level. And you literally have access to all that. $1,000 hour attorneys, $300 an hour accountants, a team of university professors that are certainly tenured, just makes sense, and an encyclopedia of information that's beyond mere words to explain. So now, maybe more so than ever, you have a capacity to be prudent and reasonable with capital management like never before in history. That that sentence cannot be emphasized more. So while the majority opt for opt to engage in the context of ignorance and YOLO mentality, all I could do is encourage people to do the exact opposite. Perform extensive due diligence, perform calculations, perform rational introspection about why you do what you do. Determine reasonable outcomes or expectations. Provide yourself an extensive technological education. Nowadays, provide yourself an accounting and legal education. Do it all. And all meaning there's no limit. You when I learned software engineering back in '08, '09, give or take, there was there's literally nothing compared to what there is today. And it was all just Google searches and Stack Overflow and just that was in hindsight, and hindsight's a bitch. Holy crap. Infinitely harder than what is available now to do what oh my god. The amount of years I spent, years becoming even reasonable at front end client side user interface development, Android. I'm quick to say that would be reduced to months. I like looking back, it's like It's an extraordinary perspective to have. It's like I spent all those years. And now with the technology available today, I wasted so much time. And I also wasted so much time in my 20s. I could have done so much more, so much sooner. Probably one of the biggest lessons I've learned in life, you don't regret the past. No matter what thought you have, you are who you are today because of your past. So that's real. You know, and it doesn't matter whether it's a good past, bad past, questionable past, it doesn't matter. Today, very right now, you are listening to this conversation and you are who you are because of the things you've done. You would not be who you are today if not for the things that you've done. So that's just important. You have to accept who you are in order for today to be the day that you start to think different and grow. You cannot let the past hold you back. You cannot have baggage. That's unreasonable and irrational. Certainly a characteristic, a very prominent characteristic of humanity, for that to be a very much the case for so many people. Baggage, always thinking about the shit that went down. Doesn't matter. You always have a choice every day to do something a little bit different. So let today be that day that you take capital management to a whole nother level and not stop asking questions until you're like, oh, everything has changed. So today is the day of all days to become an investor. Historically speaking, statistically speaking, the investor outperforms the trader over a much longer time horizon. And that is a very initial thought in why this whole conversation is meaningful. Why to start thinking in terms of intelligent capital management today. Much greater odds of success. It requires a completely different mindset, a completely different time horizon, a completely different education. But nowadays, you can provide yourself that education. So now, from an investing standpoint, maybe the simplest delineation, separation between investor and investing is just time horizon. Now, I could see it reasonable to argue that holding something for years that qualifies as an investment. I can see that as an argument, like Bitcoin hodling is an investment because that's just not a hodl. That's not trading. It's you've acquired something and you've owned something, and owning something is meaningful because owning something is an expression of who you are and your choices for your behavior. I choose to own this, like a tangible good, like a watch or a car, whatever, a house. Choose to own something. So choose to own Bitcoin, not trade Bitcoin. I could see that qualifying for the investment definition as I define it. So that's cool. They don't have to go as far as I go and be a dividend investor to be an investor. Well, the whole point of the stream, as I said, is to just give a very granular breakdown of how I define trading versus investing. So I'll stick to that. I'll stick to that delineation. Time horizon, short term trading, long term investing. You can go back and forth however you want to with regard to midterm, how long you hold something. That's probably an unanswerable conversation. And that's the point. The point is sometimes you don't have answers to the very questions you ask yourself. But the whole point is to just ask the damn question, which may lead to unending conversation with yourself. So you're starting to talk to yourself, like very much what I'm doing right now. And you could easily see how that's an expression of a degree of craziness. But I got that crazy look in my eye right now, so I get a little crazy sometimes. Talk to yourself. The one person on this planet that always will agree with your topic of conversation of choice is you. Talk to yourself. You're your best conversational counterparty. Just a just a realistic, just a very real way to describe the behavior. So all said and done, I look back, trading and investing and holding spot and whatnot, that I still, to this day, am more comfortable than ever with the concept of "fuck you, pay me." It's a very old narrative. The narrative comes from what, late 2020, 2021? The pizza shop. Remember those good days? And cash flow and and X, Y, and Z. How much does it cost? How much is it paying? And how likely is it to continue to pay? And the entire inspection we have of this crypto space as businesses, as actual fintech enterprise. So maybe all I have for you nowadays is a compilation of the captain's best hits, a mixtape, so to speak, of the most interesting shit we've talked about over the years. And all I do nowadays, in many regards, is refine the story that I tell of what we've done, how we've gotten to where we are. But it's a good story to tell over and over again because we only have a small community, 177 people live right now. And there's a lot of people in this crypto space that are sure as hell not tuned in to the most rational community in the crypto space. Anyway, that leads us to present day, where I encourage cash flow above all else, structured business rules, write your rules, define your rules, and your success, your measurement for accomplishment, your expectations are defined in terms of merely your adherence to your business rules. With effective business rules, all you have to do to meet your expectation is do exactly what your rules say to do. That's the power of defining your rules. Because with rational rules, you will achieve rational results. So to this day, I still comment every now and then on X as well as Discord about temptation to depart from the business rules. Now, the quickest way to you know, lose capital is to depart from your rules. The quickest way to acquire a bit of anxiety is to depart from your rules, which is why the way to succeed is to adhere to your rules because success with capital management is not just total net worth, as we have very clearly discussed. That is probably the most trivial inspection. The best inspection of how well you're doing is how cool, calm, and collected you are, how little anxiety you have, and ultimately how rational you are. Because that's just not a capital management thing. How rational you are carries over into your life, friends and family, and those types of interactions. And being rational counts, whether you're being judged by the Almighty or you're being judged by yourself when you're 95 and things are coming to an end. So, the 2025, think to yourself as if you're 95, and how will you judge yourself? Were you cool and calm and collected? Were you riddled with anxiety? Were you rational? Were you decent? Were you prudent? Did you express reasonableness? And to me, that's what matters most. We're looking at the Bitcoin chart, 102,149 United States dollars. Remarkable chart from a daily perspective. Didn't punch the guppies to the downside. Went back above them and bounced for yeah, you could argue it's a retest. I mean, this is almost an invalidation of the Head and Shoulders at this point. Let's put Let's put a decent line. Look at that level. Look at that. That Jesus to the tick. That's wild. So previous resistance held, resistance, or rather breakout, failed breakout, resistance held, breakdown, another breakout. We get to see whether this holds. You see a hold here, and you got a classic resistance flip support. So obviously, you have the head and shoulders inspection, which is invalidated to a degree at this point, but you need some candle bodies to have decent confluence, suggesting that inspection will hold. So suffice it to say, everything in inspecting technicals and this kind of chart data is transitory, and you need more information to draw a more firm conclusion. Separate apart from that is this freaking candle we got on the daily here. That unto itself is a nice candle. It is good to see. Lovely chart today. We'll know more after a couple of days, and we'll certainly know more after a couple of weeks. Early to tell anything. Curve 102, very similar expression. Break down through the guppies, held one, held two, break down through the guppies. Let's see if it's a high or low. So this is expressing more of a triangular compression. This has a bit more of a flag pattern as compared to Bitcoin. And that is very interesting series of higher lows right here. 68, 86, and thus far 97. This chart is quite comforting. That's what I look for in the technical data. I'm not too interested in, oh, what are the odds of an up or down? Do I short or long? And what kind of leverage? I look for comfort. I think we're back in action. I think we're back. Okay. I didn't lose. Things are working again. Yay. I hate when technicals interrupt the stream, but it looks like things are good now. Okay. One thing I did notice that's quite comforting is the cash flow has significantly improved. VECRV cash flow has been good since 22. 22, 23, and 24 were lovely from a cash flow perspective, and things are up significantly. There's just a lot. I mean, look at that. So you got smaller positions in VECRV, and this is just a lot of cash. 18%. So, there's two components to a cash flow type of position. Obviously, it's the appreciation of the underlying principal, but also the provided cash flow. And 18% is insane. And that'll receive a very critical analysis from folks that are looking for asymmetric or exuberant or completely irrational returns. Rational returns are reasonable because these rational returns are insane from a traditional finance standpoint. Because 18% on something, a base principle that is, from a technical perspective, more likely than less to asymmetrically appreciate is wild, absolutely wild. So that is exciting to say the least. I mean, it's just endless. That's just a massive list. This got short in 22, 23, and then just rebirth, obviously, Q3, Q4, 24. And just right now, the fact that there's an entire page and going halfway through the second page of cash flow options, and it's a lot. Often five and Spell is at six figures. Abracadabra is just the OG of vote rentals. They really are. But you got plenty of five and six figures here. Well, just one six figure, but plenty of five. And here's six figures with AWA, between Spectra and AWA. Very interesting. I'm not sure why we don't see Spectra yet. I think that they're just working through their biz dev, but I would expect that to occur with their tight integration with the Curve ecosystem. All the LPs for Spectra basically are on Curve. Means their entire protocol runs through Curve, which is interesting to say the least. So this is just lovely to see. Quite comforting. As I said, I look at technicals and I look at other pieces of the data to find comfort. Obviously, Velodrome still pays nicely. Aerodrome pays nicely. You know what I'm interested in? I want to see what Solve does. You're not if you have aerodrome exposure, great for base and the degeneracy on base, but the degeneracy on base is nothing compared to Solana. Still to this day, Solana's just on another level. This could be very interesting. I think this is that type of thing where you take a punt, because we have precedents for this type of protocol throughout the entirety of the crypto space doing well. And if this is the only thing of this type, with Solana no less, that could be very interesting. So right now, I'm working through the thought process of like just punt it right out, not right out the bat, uh, maybe right out the bat, maybe. And if you have enough liquid capital, a pharma position, great. So that works too. So there's obviously the purchase of the position or the pharma free position. What kind of risk exposure do you have to a new protocol? They seem like they're taking their time, exercising reasonable due diligence, see what kind of audits they have. Obviously, the base fork is from a solidly derivative of some kind. So this is probably the only thing on my radar from an interesting standpoint that might prove to be um, an opportunity in a sea absent of discounts. I mean, that's it. I have the exposure to Contango. Great. That's probably the most recent thing. I think it's still doing very well. I like what I see. Something to keep an eye on. Short, midterm, your ups and downs, but they still got open interest that's greater than DYDX. What the fuck? So, and it's Arbitrum centric, which is interesting. Hype is still Arbitrum centric until they do whatever they're going to do, but that's going to be some sort of L3. What's the point? What's the point of doing anything other than an Ethereum L2 or some sort of L3 derivative of Ethereum L2 so that, it's facilitated by what's it called? Conduit? Because this is like click to deploy an L3. This thing's wild. Something I mentioned a couple of times over the last months. I mean, it's literally click to deploy an L3. And obviously, there's fees that come along with it because there's infrastructure. But that's just the potential for what protocols like this offer is quite interesting structurally for the entire space. Anything interesting in what I do? Not quite. Kingdom, I'm interested in Kingdom V3. Plenty of exposure to Ramses, and that's what affords the expansion exposure. Um, so I look forward to V3. Arbitrum in general is significantly lagging Optimism, albeit Arbitrum has significantly more capital as compared to Optimism. So that is interesting. Um, maybe it's hype, maybe it's not. It's irrelevant. What matters is financial activity, and Velodrome is dominating Uniswap on Optimism. So that is probably one of the most interesting things that is not talked about as much as it should be. It's certainly talked about by Velodrome team, but it's not talked about as much as it should be. The disruption of a disruption, and Uniswap is a disruption since 2020, rare. But to see Velodrome retain that position for as long as it has, and Aerodrome as well on base, something to say the least that's meaningful, structurally meaningful. Ana on Binance Smart Chain, that surely had its pump, but it has retained a good part of its move. If you go over to the terminal, we should got Theta in the hot list, and that has retained a lot of that leg. So, well, you could always say it's interesting to see where it goes from here. Does it just bleed down because of emissions? I don't know. Binance Smart Chain is big. Binance Smart Chain is not a small chain. I still find it quite distasteful rather than Ethereum L2s. But if you go over to Binance Smart Chain, there's $6.8 billion on it. That's not something to neglect. And that was the original thought in taking Theta exposure. Very nominal exposure. That was like point less than 1% of the portfolio. And now it's 1%, 2% of the portfolio. 1% to 10% changes everything. So let's see where it goes from here. Definitely at a premium compared to where it was. Nobody could see a Binance listing doing something like this. Passive flows from, like Binance Earn, just flows going into that cash flow machine of buying and reinvesting the returns. And that's why the price has been supported and you don't have a full retrace. This Binance Earn program is kind of like passive flows of a 401k. You deploy capital, it gets returns, and it compounds those returns into more Theta. It's kind of like the relays of Aerodrome and Velodrome. And that's why Aerodrome and Velodrome have not just gone straight down, very much like Curve did at the beginning, the hyperinflationary decay, which took convex for it to finally break that behavior. Nowadays, the VE33s have that reflexive recycling behavior built in. Aerodrome Velodrome with the relays, Theta now with the Binance Earn integration. Kingdom doesn't really have it. They don't have the um, recycling component. Um, Look forward to V3, burn and earn. Definitely, I advocate for, as I've long said, purchase, not a position. And burn and earn is probably one of the most things that is consistent with that kind of opinion. Burn and earn. Anyhow, okay, that's my 2 cents on what's going on in the market. Let's flip back to the Bitcoin as we talk through some commentary. As I said, if you're on X or on YouTube, please feel welcome to post any comments. We'll get to them all. Yams in the house. Good morning, Cav. Can you please talk again about USDAF spot ample? So let's try and keep it not too extensive. Stablecoins. There are three types of stablecoins: CDPs, where you deposit collateral. Collateral is volatile in price and emits a dollar liability, and the protocol has to manage the value of that dollar in the open market. So no matter the stablecoin, it has to manage the value of that dollar in the open market. The true inspection for a stablecoin is what utilities, what protocol components are available to manage the value of their liability in the open market. Now, spot ample isn't a liability. Ample is a primitive. Spot is a derivative, and USDAF is a further derivative. So derivatives are fine. It's a unique primitive. Ample. It's not a liability. How do they manage relative price? So that's the thing. Active management of circulating currency. To me, that's probably one of the most innovating things I see in these crypto markets. Protocol components that facilitate the active management of spot price of a circulating currency. And that's primarily two ways to do that. Either you have a redemption model or variable interest rate policy. And I favor the variable interest rate policy as compared to the redemption model. Frankly, every redemption model that has been tried has failed thus far. Liquidity V1 is by all regards a failure. Um, Prisma, certainly a failure. It's being uh, shut down. So I'm just not fond of the redemption model. It's not to say that it's completely invalidated as a potentially successful model. It's just that we know from historical precedents in the real world that variable interest rates clearly works. So I don't know. I'm not interested in it from a capital allocation standpoint. I am interested in it as a product, just as I am interested in ROUSD, Ripple's dollar. Great. A redeemable stablecoin. So can I transfer that stablecoin to Spritz Finance and put it on a debit card? That's all that matters to me. Um, for redeemable stablecoins, like USDC is the premier redeemable stablecoin. You convert to USDC and you can put that in a debit card in 5 seconds flat. That means everything from a capital management standpoint, because one of the most important things to learn about capital management is how to actually spend your capital from your activities in these crypto markets. So the significance of USDAF as a derivative of spot, and spot is stabilized ample more or less, breaking apart the volatile component and the dollar component. That's cool. So these are meaningful attributes. And I think USDAF, it's like FPI type characteristics, inflation adjusted. So that's meaningful. Is there a return? Oh, uh-oh. So just once again, this is why I favor dollar liabilities. And that's why there's no stable coin that's like CRVUSD and money. Two stable coins of choice. Money being a derivative of CRVUSD, so it has the same properties. It's just not cent, just getting off the ground. Haven't even had a TGE, token generating event. Had a capital raise. It's literally an authorized project buy curve. Anyhow, so high opinion of USDAF, high opinion of Spot and the Amplitude team. Always had a high opinion, continue to have a high opinion, and I even like Ripple stablecoin. Am I a consumer? Not necessarily. Soon. Good morning, Cap. We gonna make it. We're gonna make it. These assets are stunning. This market is stunning. I'm very content with what I see in the market, other than the volatility of the DXY today. This candle is insane. 1.3 intraday volatility. We are at 109. We hitting 109.5 in this wick. What? So significant volatility, but volatility in the treasury market has been subsiding, albeit interest rates are at completely insane levels relative to debt to GDP and the servicing requirements of the U.S. government. So 4.6 on the 10-year. That's the no bueno zone. But they were able to get moved down to 93, which is basically the suppression of long dated treasury yields, the volatility thereof. So move coming down back down to 93 is promising. For instance, you see DXY at 107 and move at 80, heading towards 70, and it looks like it's just going to crater to 60, and you're going to have a ridiculous market. They just compound. For instance, you see DXY rolling down to 100 and move at 60, and you're going to have just absolutely insane volatility to the upside in these markets. So I do have uncertainty that I see coming, if not already present, but things look promising for upside before downside. For a good part of 2024, we were like, all right, shit's going to break. When's it going to break? Down first, then up. As more time has passed, things look more likely that it's going to go up first, then down, without that interim down period. 2 cents, high level. Arrow, good morning. Anna said, Joel, athletic concept, IMDC. Did you figure out Prisma lock? Not really. Not really. I have no idea. You go over to Prisma. I broke the auto lock, but for instance, there's 100% penalty. What does that even mean? I can't click anything. There's nothing. I can click. So I don't know what that means. Click, penalty, withdraw. I can't select anything. So I don't have an answer to this question of what the hell to do. Can't click this, can't click withdraw selected. So I don't know what it means. So clearly the user interface is telling me that whatever the hell is configured in the contracts is saying I cannot withdraw this. Uh, maybe I need a penalty of 99% to be able to withdraw this. I don't know. Penalty. I don't know. Doesn't make any sense. Anyhow, if anyone has any 2 cents on that, please feel welcome to let me know. Raul, hello. Hello. John, morning cap. Beat seems to be dominating Sonic TVL. We also have Daddy's Project, Anon, and WAGMI. Suspension of bribes with the migration. How do you feel about buying the fear? No interest in beads, no interest in Danny's project this time around. I don't care if there's significant upside. I have my exposure in terms of solidly on previously from Phantom, but that's a cross-chain protocol. Not a very talked about protocol, ironically speaking, or ironically enough. I mean, solidly is not talked about. Meanwhile, all the V33s are literally solidly. Meanwhile, the one that actually still uses the name solidly is not talked about. It's just weird. So whatever. It is what it is. I don't need to chase shit, and I don't have capital to deploy just on a spec bet. Albeit I do, meaning like solve. This seems like reasonable for a capital deployment. Um, and I thought Tango was. So I really need a critical threshold to deploy capital at this point. Something that just stands out meaningfully. Just not something that's, old school, like beats Beethoven. Old school. Awesomeness. Always killed it. Branding. Yeah, I just can't justify that kind of allocation. Anyhow. Hard convo because in a bear, 99% of coins drop 80, 90% regardless of fundamentals. Yeah, but does that matter? Does that matter? What if there's higher lows? I mean, what if there's lower highs on the DXY? That's a bet I want to take. You know, I took that bet in 22. I'm like, I own and I don't trade. So it's like, it's an investment mentality. Um, means it's irrespective of whatever shit goes down in the world. But lower highs and lower lows from a dollar perspective, like a secular trend shift, and a policy agenda from an administrative perspective, the, the executive branch, that changes everything. And that's something I would like to bet on. I like to bet we see lower low from really crazy. Like you see something weird happen with the dollar. Like you see a a policy shift and the dollar goes to like 97 and then breaks. Everything breaks when it does like a candle in a week to 104, and then the policy gets the government tools engaged and to further depreciate the dollar. The dollar's a relative game. Jeff Snyder and Brent Johnson had a great conversation. I believe it was over the weekend, and they were at Luke Grum and George Gammon's house. That was cool. It's just such an incredible thing to understand the dollar mechanic and then how it's relative. Not to have bias when you're looking at the dollar, but to understand the mechanics of it. So I think it's kind of this the uh, super cycle type narrative, of course, but there's a conversation to be had. Lower lows, lower highs from DXY from a policy perspective, an agenda perspective, and an execution perspective for administrative tools, Fed Reserve tools. Okay, it changes everything. So that just further reinforces I own stuff. That's cool. Whatever happens, I have my playbook. I have my rules. Gillis, good morning. Much a pleasure. Always a pleasure. Snoke, hello, gentlemen. Could you give us more information on how you are outlining the rest of the decade in terms of time horizons? Yeah, here's your decade-based. inspection. 6-month chart on the DXY going back to 1967. That's just a hell of a blow off top candle. And this is a retest of that value, which basically was catastrophic from a global financial perspective and took out countries in Africa. It's currently taking out South Korea. They got chaos in South Korea. Prime Minister getting arrested. Whatever's going on right now, the prevailing story is chaos over there. China's in a deflationary collapse worse than 2008. That's right now. I don't know if other people told you or not, but that's literally going on. China's in a deflationary collapse. South Korea is a disaster, and if those two countries are a disaster, everyone else is a disaster. The financial disaster going on right now outside the U.S. and frankly inside the U.S. too. Housing market crisis, um, commercial real estate, unrealized losses at the banks. Fed Reserve owes Treasury hundreds of billions of dollars. Financial shit show. Next decade, I expect dollar to trend lower high, lower high, lower low towards the 60s to be on trend. Check back at 2035. That's the type of thought that's on my mind. 2035, you know, hello. And that would be very consistent with the structure of the DXY over the last decades, 6 decades. That's my 2 cents. 2025 to 2030 is only a 5-year period. So I expect lower low, lower high, which means you're going to have a very different crypto market than most are expecting. It means you're going to have significantly reduced drawdowns, you know, across the peak to trough. But the bottom is you're going to have ferocious drawdowns. But that's besides the point. If you're an investor and you own things, all right, draw it down. What's the cash flow? Cash flow is good. All right, who gives a shit about the drawdown? So that's why you got to peer through the volatility and be like, what are my rules? Stick to the rules to find your sandwich. I understand that looking beyond 2030 is already a very complicated exercise. Yeah. I don't think it's too complicated from a dollar, though. The dollar, no matter what happens, still needs to do certain things. From a geopolitical perspective, from a domestic U.S. policy perspective, to meet stated policy goals, repatriation of supply chain, and the entire domestic agenda is completely dependent on a depreciating dollar, relatively speaking. Now, the dollar always wants to go up, always, always, always. So this has to come from within, has to be an actual policy of the administration for the dollar to depreciate. Food for thought, right? And state of the dollar's up. Ugh, I'm not getting into it, but that's the reality. That's the net high level reality that most need to be told. Oh, it doesn't crash. There's no crashing for the dollar. Dollar goes up unless the policy of the administration is for it to go down. On the other hand, I would also like to ask you if you could summarize what you think the traditional stock market does not offer opportunity right now. In a dollar depreciating world, capital flows outside of the US. You'll have liquidation of overinflated equities and emerging market, basically the emerging market cycle. This chart right here is expressive of the emerging market cycle. Lower high and lower low on this chart, and you're going to have structural depreciation of the US equity markets. Now, still a huge amount of capital, so you have internal capital reallocation, so you have sector rotation. You have maybe the depreciation of overpriced tech equities and the reinflation of value stocks, manufacturing, refining, mining, and that's what the administration wants. They want to break this concentration of capital in bullshit boomer meme coins and refinance and direct capital towards shit that is important, manufacturing, mining, your blue collar shit that produces jobs. Um, so frankly, a depreciating dollar would do that. You're not invested in Apple for the cash flow. You invest in Apple because it's expected to go up 15% a year and outperform the goddamn S&P. So I don't think that plays out. It doesn't make any sense. It's literally contradictory to stated administration policy. They want to cause a manufacturing boom in the United States. And to do that, you drive down the price of the dollar, you drive capital outside of the United States, which is the emerging market trade, and that will cause sector rotation from overinflated boomer meme coins to value, value investments from an equity standpoint, where you actually get value for your investment. You're actually getting something, and that capital is being put to work to build manufacturing plants and refining plants and blue collar jobs. The breaking of malinvestment. A depreciating dollar will break the malinvestment. That's my expectation for the next 5+ years. What do you think about commodities market, bonds, real estate? Bonds are dead, non uninvestable. Real estate, not from an investing standpoint, but from a living standpoint, even from a second home standpoint, that's cool. If you could find something that makes sense, that's cool. Always remember that debt is nominally service, so that's cool. You pull it in 20 grand a month and you get a property by the beach that's $2,000 a month with, you know, you get some sort of stupid government loan that's like 5% down or 2% down. It's like 2% down, 2 grand a month. That's 10% of the 20 grand a month income. And then you forego how much you pay in the bank for the property. It's a $500,000 property and you're paying them like 1.25 mil. But on monthly servicing standpoint, 2 grand a month, 10% of your total income, great. Yeah, and your income is going to go up if your income is tied to, inflation and market activity and the growth of fintech crypto enterprise. So things like that make sense. I'm not into the investing thing. Uh, for instance, 2 grand a month uh, for the mortgage for the property, and then you got to pay taxes and maintenance and repairs, so on and so forth. Airbnb shit, and what you're making like 4 grand a month, 8 grand. All right, fine, 8 grand a month. That's if you're booked. I don't want the uncertainty of Airbnbs. I hate that shit. I don't like that business. A lot of people do. To me, crypto market is much more understood. I find greater comfort in these crypto markets than real estate investing or the equities markets, which is a very contrarian reality. Most don't understand the crypto markets. They're intimidated by the crypto markets. They're like, "Oh, it's just gambling." No, this isn't gambling. This is literally investing. It's investing as most don't understand it. It's investing literally in these are value. This is pure value investing. How much is it paying you? What is the dividend rate? And how is the dividend managed? And that's the entire rabbit hole that changes everything. Insane to compare crypto dividends versus equity dividends. Just highest of level, crypto dividends aren't dividends. Crypto dividends aren't money. Crypto dividends are crypto. Crypto dividends are property, as per IRS definition. You are receiving property. And that unto itself is mind blowing of a rabbit hole to even begin to talk about. Receiving property on a weekly basis, that's crazy. So, anywho, Sir Joe, present and accounted for, sir. Yes, sir. Yes, sir. Snog, forgive me for asking such broad questions, but they seem interesting to ask. I'm sure other people are thinking those questions as well, and never hesitate to ask questions. They are great questions. Gives you a sense of what the hell is going on in these crypto markets. And to understand that, you have to understand the macroeconomic environment, which includes US equities and how everything is going around the world, especially China and Europe and the euro. But and that's why the DXY is such a high level inspection of what's going on with currency, relative currency valuations around the world, because it's mostly euro and yen, but everything else is paired with euro and yen. So you get that high level aggregate viewpoint. I think it's back. That was a while ago. Yeah. Going into the South V3. I don't know if there's a pre-sale. Is there a pre-sale? Let's talk about that on Discord. As I said earlier in the stream, that's something to talk about. Solana and the V33. Let's talk about that. No, I don't need to chase shit. Banger after banger. You'll look back in 5 years, and I have more comfort than ever that it's already a success. Everything is already incredible compared to 2019. In 5 years from now, with what we saw Chamath talking about, what we saw him talking, man, where was it? Here, what he was talking about here. You could check my post history. Done, done. To 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 anyone that's listened to this content for years, this is just baked in the cake. It's all baked in the cake at this point. It just hasn't happened yet. But this is all coming. The best is coming. It hasn't even happened. And already what has happened is insane. And by the way, this post by what the Curve team's done is insane. I didn't expect this kind of transparency. I'm not surprised by it, but I am surely comforted by this post is wild. You know what this post reminds me of? Back in the day, like 2021, 22, Yearn used to do like they did a post-mortem once, and it was wild. The clarity, I was like, this is a professional dev shop post-mortem, like what I would see in corporate America. This post right here, lever of the tail, transparency, this is a very, very impressive post of information. Very, very interesting to say the least. What else can I possibly say to that? Rational philosophy at its finest. Thank you very much. I appreciate it. Um, Anywho, where are we at? Ending the stream at 101,799. DXY 1083. This thing was as low as 107 and change today. The intraday volatility, we're at 108.30 already. Intraday volatility is absolutely insane. I just, you should always be expecting shit to break. The entire global financial system is always on the precipice of some sort of event. So just always understand that. But that is a completely separate component of the conversation of what to own, what to buy. What to own, productive business. When to buy it, as cheap as possible. You want to buy it optimally at a price that when shit hits the fan, it doesn't go to the price where you bought it. Now, that's easier said than done. And clearly, in a hindsight perspective, you're like, all right, fine. If I bought Curve at 20 cents, it'll be a goddamn good price. Considering the biz dev that's going on right now, they're literally talking about sustainable economics from a biz dev standpoint. That means they have a capacity to self finance. There they do like biz dev and find investors to take circulating supply to cause appreciation in the token price, and they're locking their Dow grant, and that Dow grant is just producing the cash flow to run business operations, and they're actively seeking out people to trigger the appreciation, which increases their funding, which forward positive flywheel. You know what that does to the LP returns? What the cash flow is like for LPs? Cash flow for LPs is directly proportional to the current price because the LP fees or incentives are paid denominated in Curve. Positive flywheel. We've never seen a positive flywheel for Curve. It was always amongst the backdrop of emissions overwhelming demand. Emissions have come down significantly. And the vesting stuff last year in August, so the emissions are significantly rolled over at this point. And now that So Michael's concentration, that was a vested interest complexity. And I would argue that that always needed to be solved. You cannot have overinvestment from an individual because that just clouds the sentiment, increases the risk profile of investment inspection. But there's no longer a vested interest concern. the stars have aligned. Now, it took a lot of pain for those stars to align, but the stars have aligned in so many remarkable ways that there's very little in the crypto space that compares to how well the stars have aligned for the Curve ecosystem. And that's a rational inspection, ladies and gentlemen. Trevor in the house, much a pleasure, much a pleasure. Any interest? Oh, Trevor, by the way, I don't know if you're on Discord or not, but if you get to the document, 1B3 maybe simplify some of the complexities you were considering with regard to HEMS expenses. 1B3, well, frankly, 1B. 1B is pretty much wild. Like I have to talk to a accountant at some point, and 1B just explains the overall most important components of the business structure. So if you ever get a chance to see the document, 1B is pretty damn interesting. Any interest in VE Dolomite? As about right now, no. I'm interested in Solve. I'm interested in Resupply. I'm interested in, Tango's locked. I don't think I'm taking any more Tango. That's fine. Good exposure there. Nothing that I want to increase in size right now. That's it. And I'm not overwhelmingly feeling I want to invest more right now. This is more of just standard business operating mode, cash flow accumulation, and management of that cash flow in a strategic way. You get enough cash flow, it becomes a degree of an investment itself. So, yeah, at least the productive component of the portfolio, best said, you make it 20% on cash, 15% on cash. That's crazy. So, food for thought. Too many portfolios out there have too little stablecoins. Now, obviously, you got to get to a critical quantity of stablecoins for them to be a meaningful component of the portfolio from a productive cash flow standpoint. Okay, that's a given, but that is a real thing. And in the back of your mind is probably a decent goal, at least define what a critical threshold of stablecoins is. Define your goals, define your targets, define your expectations, define your business rules, define your behaviors. What do you do under this circumstance? And the better you define all of this shit, the less anxiety you're going to have. And that's the Captain's Dream for Monday, January 6th at 12:41 p.m. I hope you all find a little bit of rationality in these types of conversations. Find your way to manage the anxiety because there's no business having anxiety in capital management. Cool, calm, collected. You need to know what you need to do, when you need to do it, and why you need to do it. You need to be the best dinner table investor there is. Always be able to tell a story about why you're doing what you're doing. 264 people made it to the end of the stream. I appreciate each and every one of you, and hopefully, we are all a little bit more rational because of our conversation today. It's Monday, it's the 6th. I wish you all a good one. I will see you, ladies and gentlemen, later this week. Till then, peace.